When thinking about what to say for this video, it really wasn't super hard. Caterpillar sticks out to me in one key area. This right now is like value stock personified to me. It just is, right? So there's, in case you don't know, there's different categories you can put stocks into. You know, there's tech stocks, there's dividend stocks, right? I mean, and they don't sell themselves as that, but they often fit into these categories. Maybe they're high PE tech stocks that are growing really fast, maybe like an SMCI or an ASML. Then there's stocks that are unprofitable tech stocks that just IPO'd and are like going up in 2021 and going to get rug pulled. That's what happened to a lot of those, right? I'm sure that's not what they categorize themselves as, but that's what I'm categorizing them as. Then there's the Mag 7, right? Things like that. But Caterpillar just absolutely screams value. Let's look at a bit why. So over the last 5 years, they're up 230%. That's basically double the S&P 500 performance over that time frame. We could look at something like VFIX. The last 5 years, 95%, more than doubled. Pays roughly the same dividend if we just make the assumption, right? Also, you see, I had to re-record the video. I had a misstep, but if we look at the PE, 18.5 times 1.45. This is about the S&P 500 average PE. Ford PE isn't that much lower. It's about the same. But still, you can currently buy a stock that is non-tech, right? That has more than doubled the S&P 500 performance over that time frame while being at a 45% discount. You may just think, oh, that's over that time period, they're consistently gone up. If you take 2014, they've 4x'd over that time frame, the S&P 500. Yes, so over the last 10 years and the last 5 years, if you take those stretches, right, they've done particularly amazingly. Caterpillar's just done better. And you can get a good discount, like I said. So that's why it screams value to me, right? Earnings, they've consistently beat, by whatever percent that is off the top of my head, what, 10 to 20-ish? They're not projected too much more, but if we assume this is close to a floor, which over the last year, they've beat whatever. I'm not sure if this is their projections or analyst projections, but they should be using the same because usually companies don't project quarter by quarter and then stop doing that. It really depends on the company. But if we take it as, okay, they'll likely beat on most of these, then this is more of a floor. Excuse me. So yeah, it's maybe it's Ford isn't growing as fast, but still, it just takes 1 year. So this is just a great value play, right? 2020, when it fell, but it didn't fall an incredible amount. Right? This isn't going to be one of those tech stocks where it's barely profitable and has high amounts of debt, could go bankrupt. When recessions happen, those companies get absolutely destroyed. And if there is, a huge market downturn, 50%, I'm not sure unless it impacts construction directly. I don't think it's going to be like, oh, Caterpillar's defunct or not useful. You'll probably just be able to scoop up shares very, very cheap. In all likelihood. I don't think the U.S. is going to stop spending on infrastructure anytime soon. I'm fairly bullish there. Whatever you think about politics, I try not to dive into it too much just because that's reality right now. But I don't think it's controversial to say that both the Democrats and Republicans aren't afraid to spend money on infrastructure. It happened during the Trump administration. It happened during the Biden administration. None of them are like, we're going to cut infrastructure spending. So I'm not particularly worried about and the money is there. I mean, there's money getting poured in for, years to come. My understanding, I don't pay super close attention. I could be wrong, but I'm pretty sure they don't have any ultra serious competitors. Let's look at some similar companies briefly. Deere, they're trying to get in that space, but that's not mainly what they do. And then everything else is at least half as large, if not a third or a fourth as large as them. So yeah, dividends projected to go up. This is a beautiful value stock. If you are a value investor and you do not hold Caterpillar, you have to look me in the eyes. I don't have a webcam. I will one day. You have to look me in the eyes and tell me why you don't own it. I like tech. I generally do. I don't mind value. I have diversification. I am putting this down in my stock portfolio or not my portfolio, my short list, right? You could call it that, for stocks I want. This is beautiful. It truly is. As a long-term investor, this is a value stock you want. It just is. It's good diversification. It's in a good American company, right? You don't have to worry about ADRs. You don't got to worry about weird tariffs. You don't, right? You don't have to worry about infrastructure spending too much. You don't have to worry about rates. Like, you don't have to worry about overvaluation. This company isn't particularly overvalued, at least compared to the market. Maybe because it's to its normal sense, but I love this. It's so good. I assume most of you know what Caterpillar is. I hope you didn't make it this far, but they do construction stuff, right? Manufacturers selling construction, mining equipment, off-highway diesel, natural gas engines, industrial gas turbines, even gas stuff too. I mean, they're not gonna. Man, it's excavating all this stuff. Just, dude, I like this stock so much. I love this stock even. I don't own it. I'm starting to regret not owning it. Unfortunately, just the way I put money into the market, it's going to be a little bit. I just did. I don't think this stock is going to shoot up to 30 PE, so I'm not particularly worried. This is a value stock. If you are an individual stock investor and you like value, you like diversification, this looks beautiful. Do whatever you want. Do your own research past this video, right? I'm not telling you what to do, but I don't get how you wouldn't have this stock. I would. If I was a value investor, oh my gosh, I would be all over this thing. It looks great. Schwab thinks it's going to perform very well over the next year. Economic moat wide, I'd agree. I'd give it an 8 or a 9. Maybe 7 if I was really grumpy. Buy, long, hold, decent ESG score, and whatever you think of that. Analysts are saying hold. They don't want the shares to be bought up. They don't want you guys pushing it up any higher. So they can keep DCAing in at these levels. Just keep rolling in it. They don't want it to hit near 30 PE because then they might have to pivot to a different stock to DCA into. I'm mostly kidding. Half kidding. Of course, I don't want to phrase this video too much like you need to do this, right? It's your money, do your own research. This is not investment advice. However, this stock is phenomenal. This is great. I'm in love with this stock right now. Anyways, that's all I got for this video, guys. So if you watched it this far, if you agree or disagree, let me know in the comment section. Leave a like, subscribe, and hopefully I'll catch all you guys next time. See you later.